Hey everyone, just wanted to jump on here today to share a little bit about the latest investment opportunity that we picked up for our clients. Uh, this is a personal favorite of mine as it ticks the boxes for a lot of what of our clients are looking for. This is great for someone who wants a really strong cash flow positive investment as part of their strategy, and are still looking for a house and land component in an affordable location. I'll just move my head out of the way there. And the market that we want to be talking a little bit more about today is the wider Perth area. And then once we touch on that, I want to show you a little bit about the specific site that we've picked out as an investment opportunity. Overall, in Perth, some of you may have seen there's a shortage of about 20 to 20,000 homes that's been forecast over the next 4 years. In a market where the vacancy rates are sitting at about 0.5% already, with yields of rent at about 5 to 5.5, what this is likely going to do is put further pressure on those rents to increase. And in an environment like we're in right now, where interest rates are going to rise, it is almost imperative that we're investing in areas that our rents are likely to rise as well. That's going to help protect our cash flows. So this is great news for a lot of our investors, and it seems like a no-brainer when it comes to cash flow. The most common question that we do get asked though is, do we think that the Perth market is going to grow? And when we look at the data and go through the leading indicators that are there, it looks like there's a bit of a storm brewing in terms of the growth story for the Perth market, and in particular in the affordable locations. So the main things that are going to be driving this growth in price is likely to be, of course, the population growth in conjunction with this supply shortage. And then it's also tied in with the affordability of some of the markets that we're looking in and the ease of getting into those markets based on the average incomes that people are making as well in these areas. So I'll dive in and share a little bit about the population growth. What this shows here, this is from the Department of Home Affairs and kind of discusses the migration patterns. Historically, we're seeing that after Sydney and Melbourne, Perth gets the greatest amount of international migrants that are coming in, and then the large percentage of those are skilled migrants as well. So now that the borders are open and international migration has been forecasted to start, we're going to see a large amount of people coming in line with those supply shortages that we spoke about. This is going to put a lot of pressure on some of these markets, and going to believe that this is going to one of the things that is going to drive that growth. And then now the next thing that we want to look at is affordability and the accessibility to these markets. So as a starting point, Perth, in line with Canberra, has the lowest unemployment rate in the country at 3.7%. And then we've got the average income per person, weekly earnings outside of Canberra. Once again, second, we've got in WA, that's where we've got the highest income. So now, what does that mean in terms of affordability? When we factor all of that in with the average median price of these locations, WA and Perth become the most affordable places in the country. So what this does is we're looking at the average income that each person makes. We're combining that with the vacancy rates, with the unemployment rates, and with the median house price as well. So that means the access for people to be able to buy this stock is also the most easiest in the country as well. So when you combine what's happening with the population growth, with the supply shortages, and then the affordability to get into that market, these indicators mean that it's going to be quite accessible for people to get in and put pressure on those prices to grow. The specific area that we've highlighted that is a potentially strong investment opportunity is in this suburb called Lakelands. So this suburb rests between two of Perth's biggest satellite cities of Mandurah and Rockingham. And this entire coastal area here From what we've seen, and we actually spent about 2 weeks last week in Perth, kind of going through some of these sites, and it looks like there's about 7 to 10 years before all of this area on the coast is built out, and then the developments are likely to move more inland. Why we like this specific area of Lakelands is because there is already a lot of infrastructure there. We've got the shopping center, we've got primary schools, we've got high schools, we've got the beach, we've got playgrounds, and having spent and physically been on the ground there, you can feel the vibe and the buzz in the location, and you can see the gentrification that is happening. A lot of big owner-occupied homes in the area where people have spent above and beyond, which is making the area look really nice as well and very well looked after. And in terms of new infrastructure coming to the area, there's a train that's coming here in Lakelands. So right now, the train station that goes into Perth, it's Mandurah, which then goes to a suburb called Warnbro, which is here, and then Rockingham. So there's going to be a train station here in Lakelands that's going to be built and completed in 2023, and that will take you into the CBD in 45 minutes. In terms of driving from Lakelands to Perth, I believe it's about 45 minutes. There you go, 45 minutes exactly to drive into the Perth CBD as well. So in Perth terms, 45 minutes is relatively far, but when you kind of see what's happened in the States, like in Sydney and Melbourne, 45 minutes isn't considered that far. And as the Perth is getting bigger, over time, this is going to become more and more normal. And we've already seen that a lot of people in Perth, from speaking to them on the ground, with remote work and more flexibility, people are moving to areas like this for bigger houses, but still having that accessibility to come into the city for work and whatnot as well. This is kind of what I was talking about a little bit earlier. So the train station goes from Mandurah and then Warnbro. So Lakelands will sit right in here. So just to highlight again, so we've got Mandurah, Lakelands. Oh, we lost Warnbro. We've zoomed out too much. Yeah, there's Warnbro and then Rockingham. So getting into a location right next to a train station, as we know from time and time again, and a lot of the other investments that we've done, is going to be absolutely critical for the long-term growth of that location. You can jump on and have a look as well. This is the Lakeland station. You can see here, it's going to be between Warnbro and Mandurah, I should say. And there was a completion date on here, which has gone missing, but it is going to be completed in mid-2023. As things get delayed, let's say we'll be done by late 2023. So some of this I was touching on earlier. So in terms of the vacancy rates in the area, we're looking at 0.41%. So extremely, extremely hard to get a rental. And in terms of the demographic in there, we're looking at a rental population of around 20, so we'll call it 21%. So circa 81% of people in the area, 80% of people in the area are owner occupiers. These are the kinds of places as investors we want to be looking at, because owner occupiers are the ones that inflate prices, buy emotionally, and it causes, the house prices of the area to rise. So when you're getting investment opportunities located in an environment where we've got a lot of owner occupiers coming in, wanting to get in there, and also when they're in there, the area is going to be very well looked after. Those are the locations where investors want to be getting into. And these land developers in these areas, they want to preserve that as well. So there's only a finite amount of investments and investors that they will allow into these communities as well. So this is definitely going to be great to serve long-term as a growth opportunity for that reason as well. So now just wanted to jump in and share a little bit about the cash flows, so you can kind of see what that looks like. So this is one I did for one of my clients last week. So we're looking at a purchase price of $524,000 for a house and land opportunity, 4 bedroom, 2 bathroom, 2 car space. The purchase cost, so that includes the stamp duty and solicitor fees in there, very low because you're only paying the stamp duty on the land component. Here, capital growth rate, I've thrown in the long-term average here of 4%. So this here is what impacts this top line here. You can see what this property is likely to be worth in 1, 2, and 10 years time. So this one is the historical average based on what we've been seeing and all the leading indicators that we spoke about earlier. I personally believe there's going to be a much stronger growth than that. But for the sake of this, we want to use the long-term average and let's look at it conservatively and let's leave 4% in there. Inflation rate we know is conservative at 3.5%. We know that it's been about 5% recently. The inflation rate is what impacts what the rent is likely to grow by each year. Once again, there's other factors beyond this, which is not incorporated into this calculator, like we spoke about, the supply shortages and the vacancy rates being so low. So I wouldn't be surprised if the rents grow even more than that as well. So once again, we're looking at a conservative $500 a week for rent. If we're putting in an interest-only rate of 3.75%, more often than not, we do recommend going interest-only. You're looking at about 30 to 20 basis points higher than a P&I interest, and then you have the control and the flexibility of how much you want to pay down, and it makes it much more easier to be in control of your cash flows. Rental expenses in there as well, 28%. Once again, probably a tiny bit high, but that's okay. Better to be conservative than not. And we're looking at the depreciate. And before any kind of tax benefits, we kind of factor in, we're looking at a positive cash flow position of about $2,100 a year there. And once we factor in the tax benefits, we're looking at a depreciation of 2.5% for all the building costs, which stays constant for 40 years. And then we've got the depreciation of fittings, roughly about 30,000, which slightly goes down for diminishing returns over the next 10 years. So once we factor all of that in, we're looking at a cash flow situation of $5,800 for the year. And if you look at that weekly, that works out to be $112 back into your pocket. So a really strong cash flow positive investment that has got the characteristics of an area that is likely to grow. And even if these leading indicators, for whatever weird reason, don't come into fruition, we've still got the long-term average of 4% where this investment is likely to grow by. What I want to do next is actually bring up an example of one of the builds. So this is a typical floor plan of what we would put in these house and land opportunities. Having had the chance to be on the ground and see these, obviously the floor plan itself probably won't do it justice in terms of the design and finish quality. But what I want to show you a little bit is the layout. You're looking here and seeing, so this is a typical four bedroom, 2 bathroom, 2 car space. And one thing that we actually learned as well in Perth, for most of you actually have a theatre room as well. And if you don't actually have a theatre, that actually impacts valuations. So it's critical that we have that. But also, if in the future, that can more than comfortably be turned into a 5th bedroom as well. You can't quite see here as well, but there is an elevation on the roof here in the living and dining area as well, which makes that area look even more glamorous too. Okay, so that pretty much sums up the entire opportunity. So going back in terms of chatting about the cash flows that we have for the Perth market, the leading indicators that are showing a little bit of a storm brewing in terms of the growth opportunity, the specific locations of Lakelands that we spoke about because of the affordable price point, proximity to beach, already a lot of amenities in there, train station coming, and transport to CBD. And here we have the build as well that we're looking at, which is a nice big build because of the bigger land sizes that we're getting in the Perth market when compared to some of the things we're seeing on the East Coast as well. Hope this is informative. If you do want to find out more, feel free to reach out to myself or anyone else on the Wealthy team. Otherwise, have a great day and happy investing.